Okay, good morning, good afternoon, good evening. I am Micheline Dion, Chair of the Resource and Environment Working Group. Welcome to this IAA webinar on climate change, insurance, and vulnerable populations. The paper presented today has been developed by the IAA Resource and Environment Working Group and follows a number of papers published by the REWG, the most recent one being the flood risk in 2019. Then before that, it was decarbonization, and we had a paper on climate change and mortality. And of course, there were some papers before that. There's also other papers that we're working on for future distribution. These papers are published for the benefit of actuaries to familiarize them with the environment topics. Some are closely related to traditional fields of expertise for actuaries, while some extend to roads less traveled, but still pertinent to actuaries and to help bringing together further actuarial insights for the greater good of society in general. This paper bridges both. The speakers today are Sam Gutterman, the main author of this paper, and Reid Muslin, who's contributed to many chapters. Both are actuaries. Sam is American, a past vice chair of REWG, and a frequent speaker for the IAA. And Reid Muslin is Australian and current vice chair of REWG. Sam, the floor is yours.
Thanks, Micheline. This paper, as Micheline mentioned, or this presentation is based on a paper of this same title. It's a very, I think it's an important topic, important paper, because it doesn't take the general view like many papers on the topic of the developed world, and it's attempting to look at it from the viewpoint of vulnerable populations, which we'll get into in a minute. First question is, why are we addressing this topic to begin with? In addition to what Micheline mentioned, we believe that it's important for actuaries to understand the risks underlying climate change, not only the general science, but in fact the translation of the risks to the damage state, where actuaries have dealt with in many areas. But in this case, it's especially affecting the vulnerable populations, and I'll get into that in a moment about how we define vulnerable populations here. There are several approaches that can help address this risk. Certainly, in this case, actuarial and insurance approaches are fundamental and key, and Reid will be talking about that shortly. We wish to encourage actuaries to work in areas involving the public interest, and so we encourage actuaries and actuarial organizations to get much involved. That's consistent with what the IA and the actuarial profession is all about. It can be accessed on the IA website under publications and papers, and we encourage those people who are listening in to go and visit and read through the paper itself. The chapters of the paper are given here. What we'll be doing today, I will be providing some insight and discussions of not only an introduction to climate change and to vulnerable populations. Reid will take chapters 4 and 5, which will be covering risk management insurance, and particularly focusing in on useful insurance approaches. I'll take the discussion forward in the last two sections, as I'll be discussing some other approaches to this topic of climate change and vulnerable populations. And last, just briefly talk about some of the roles for actuaries before we get into the Q&A section of this presentation. First, climate change. I'm not going to dwell on the science itself, but it isn't just temperature. It covers various climatic factors, including temperature, precipitation, humidity, wind, and a combination of these factors is usually the most significant in terms of potential future risk and costs associated with climate change, both in terms of both their level and their volatility. So therefore, it's not just whether you've averaged a certain level, but in terms of the volatility of it. You'll see on the right-hand side, you'll see the Actuaries Climate Index through the summer of 2019, which provides an indication of the volatility that has occurred since 1961. You can see obviously an upward slope. That is the index, that is the level of particularly the volatility is shown more recently to become higher and higher, and it seems to be setting records every quarter. But the values are compared to the base period of the 60s through the 80s of the last century. And it's also available in Australia, and it's being studied for potential expansion to cover other areas of the world in addition to Northern America and Australia. In general, climate change is split into two types. That is being sudden and slow onset. That is sudden, which is the storms, the types of things that can come on at any time, and a slow onset, which is ones that are cumulative, like sea level rise, which doesn't happen all of a sudden, but which accumulates over the decades. In addition, there are the ones that are combined sudden and slow onset, that is droughts, famines, etc., scourges of the world. There's been various types of risks and costs associated with climate change. Sometimes it's typically looked at in terms of both physical and transition, that is decarbonization phase. Also, risks include litigation, that is those lawsuits against companies and governments where that organization or entity is held liable for not acting. I added the word indirect, as we've seen in the current pandemic. A significant amount of risks and costs are not only associated with the event itself, that is the physical effects of climate change, but also the economic effects of mitigation and action to counter those other effects. In terms of the climate change literature, there are usually methods used to combat them are categorized in two categories. One, mitigation, principally a reduction in greenhouse gases, and second, adaptation, that is trying to minimize the costs and damages associated with the change. I won't get into the details of types of changes and effects. You can read them on the slide. But they include something that is often not mentioned, which is the psychological stress and health effects. These are not insignificant, and they affect quality of life, which is not something that you can put a dollar or a currency value to, but which is significant nonetheless. Would like to mention briefly before I leave this section, two factors. One, that the impact of climate change differs widely by region and even at a local level. The impact differs by the vulnerability and sensitivity of the people and businesses involved that are affected, and particularly to the population that's most vulnerable, has a most significant effect on those individuals in areas where there's some resilience already built up. And lastly, changes can have favorable effects. Although we emphasize the adverse effects, it also can be favorable. That is, depending on the area and region, climate change can be favorable. So it's not something that is totally gloom and doom for everybody involved. I mentioned before vulnerable populations. What we define in the paper as being vulnerable are those people who are adversely or tend to be adversely affected by climate-related changes more than the average individual. And it's something that it differs by type of climactic change and effect. So it's not, just don't want to, there's no such thing as an average person affected by climate change. Everyone is affected in a somewhat different way, depending on their circumstances, their socioeconomic status. And so therefore you've got to be sensitive, not just to the average affected by a 2% increase in temperature, but to those people who are affected more so, and particularly related to their exposure. Obviously, someone on a bank of the seacoast is more exposed to sea level rise than someone in the mountain. Some people or some physical conditions or structures are more sensitive to these changes, and therefore will bear more damages and costs. And also the adaptive capacity. There are some people can, with minor changes, say it's just a no, never mind issue. It's just a cold, it's just a warm snap. Why is this different than any place else? But in some cases, once you pass a tipping point, clearly climate change has a much more significant factor. We can categorize it by socioeconomic group and geographic location. And although it's typically thought of as being mostly concerned in least developed and developing countries, that's not just only the case. In developed countries, there are many subpopulations, sub areas where there's just as much of an impact. Yesterday, there was in a paper that just came out indicated that in the United States, a significant population of pregnant women are affected by climate change and changes in temperature. So this is a concern that's a global one, even though it's concentrated in certain areas. This is a graphic from the paper that talks about these, starting with climate drivers, moving to the trajectories of exposure, the health impacts, and the health outcomes, as well as the property impacts and property outcomes. People in poor areas, people in chronic medical conditions, people with reduced access, all are much more concerned and are elements of vulnerability. So therefore, as I mentioned before, it's not just an average situation. With that, I'll hand it over to Raid.
Hey, Christian, if you'll transfer me control. Thank you. Oops, I don't know why it does that, excuse me. Okay, just a second. So the next thing, what I want to start with is a generic risk management process where we look at identification of risk, measurement of risk, control of risk, how we finance it and how we monitor it. And I want to talk about that in the context of how that differs for vulnerable populations. So the first step when we talk about risk management is to identify those risks, and they often are based on the location of the population in relation to some hazards such as rising sea levels or flooding. And I would note that many vulnerable populations are in high-risk areas. They often tend to inhabit areas that are less desirable within their societies. That could be on hillsides, subject to landslides and heavy rains. It could be on the banks of rivers and other places that are more susceptible to loss. And we talk about evaluating and measuring the risks that they may face. We often lack quality information on the type of housing or the structures where people live. And often those vulnerable populations can struggle to afford sufficient protection to protect them and their families. When we talk about controlling the risk, I guess a bit of good news is often because vulnerable populations have relatively in the past had limited amounts of risk mitigation, there are steps that can be taken, which we'll cover an example of in a minute, that can make a big difference with relatively modest investment. When we talk about financing losses, basically, if you cannot avoid a risk, the next step in many countries is to finance that, and that's often done through insurance. In the case of developing countries in particular and vulnerable populations, often insurance solutions are either unavailable or unaffordable. So the financing sources are often very different, and sometimes they're dependent on aid, and aid can be somewhat unstable. In the sense that it often depends on donations from multinational organizations, and certainly in times when economies are stressed and aid budgets are stretched, that can be challenging. Monitoring the risks in the risk management process is also very important. I know I worked many years in various developing countries in Asia, and one of the big issues after a major disaster was trying to measure whether the aid or the insurance services or the rebuilding efforts were done efficiently, and whether the construction was done of proper quality. And often monitoring can be challenging in many locations and with many vulnerable populations. So the primary objective of this paper is to sort of look at vulnerable populations and climate change through the lens of normal insurance risk management concepts, but also with a specific focus on the needs of vulnerable populations. So when we talk about lines of defense for climate risk, obviously the most important is mitigation, which involves reducing the amount of greenhouse gases emitted, but that requires action at a global level, and often many of the places where vulnerable populations live are not necessarily the same places that are generating the greenhouse gases. The next step is then preventing loss. If you cannot eliminate emissions quickly enough, you can try to prevent loss. Often that involves building structures more resiliently, or not building in highly vulnerable locations. That can be difficult with vulnerable populations because they often lack the resources to build sufficiently to avoid loss, or they live in areas more highly exposed. We can also try to control losses, which is basically taking steps to reduce the expected damage. That can be challenged by poverty and lack of resources to retrofit. And it's a problem in many affluent countries. For example, many people of limited means, say elderly people on pensions, may lack the ability to retrofit their houses or strengthen the structures they live in to adapt to more extreme environments due to climate change. And finally, risks can be managed through approaches such as insurance and risk management, but these can be challenging for reasons I'll get to in a moment. There's a major question too of public versus private insurance. Sometimes conditions for insurability in private markets are not met. And even in many very developed countries, we find shortages of available, affordable insurance, but particularly in areas that have the characteristics on the screen, with areas subject to extreme events like huge tropical cyclones or tsunamis. When you have an inability of people to pay the required premiums. And very important is the third point in many areas of vulnerable populations, which is a limited ability to distribute an service insurance products. That's particularly important, but again, fortunately, it's something that can be addressed to some extent with technology. So often, public systems or public-private partnerships are brought to bear to help overcome some of these issues. And that's important because sovereign power can be used to compel payment and cross-subsidies from more affluent to less affluent individuals. And it's important, too, that governments can spread losses across time in addition to across space. And what I mean by that is that often private insurance systems have to fund losses temporally, meaning within the current time period, Whereas governments can issue debt and bonds, as we're seeing during the pandemic, and can often spread losses from today into tomorrow. That can be important for developing countries where the economies are improving over periods of time, and possibly it allows them to make investments in providing coverages for citizens today that can be funded by future economic growth. So when we talk about climate considerations for vulnerable populations, as Sam mentioned, the climate change has increased risk for many locations. And it's not just about more frequent or extreme events, but it's also the variability in events. You know, many vulnerable populations, since they're dependent, for example, on agriculture, are much more susceptible to things like extended droughts and highly variable climate conditions. Another important issue when we think about vulnerable populations is that, you know, using historical information can be more challenging because of sparse data in many countries. Also, many of the risk assessment tools that were created contemplate insured assets in developed countries. And there's been limited research on vulnerable populations, including things like construction practices and the resilience of the housing stock or the buildings. And that poses some significant challenges in terms of applying modeling tools, for example, to many countries. And it also makes it more challenging to identify protection gaps and uninsured risks. And I guess finally, I'd note that, you know, seldom have we seen, you know, the inclusion of climate change in many insurance solutions available to vulnerable populations. An important consideration is the effect of development. And when you think about it, you know, less developed populations, you know, as a tendency, have relatively fewer physical assets and less protection, and then thus they tend to have a higher risk of mortality from events. The loss of life is often much more significant amongst vulnerable populations. More developed populations tend to have stronger protection of life safety and higher assets, and thus experience relatively less death and injury, but more economic loss. And this is a normal transition that often occurs on the journey of development for many countries. As I mentioned a minute ago, agriculture is an important source of employment for developing countries, and thus agriculture insurance and ensuring the security of agricultural harvests is very, very important and a significant risk factor in an era of climate change. And finally, I'd note that urbanization can create issues. Second point there, I note flood risk. You know, many cities are subject not only to rising sea levels, but to sinking, as we've seen in Bangkok and Jakarta, and often that puts vulnerable populations at risk of flooding. I mentioned a minute ago that technology can make a big difference, and I wanted to kind of make a comment here about what I see as a positive good news note about what the potential for technology to improve situations with the losses from severe events. So even though we may be in a period where extreme events are becoming more likely, more extreme, and, you know, threatening vulnerable population, technology can make a difference. And here I've offered an example of Northeast India. That's the area around Kolkata, Bangladesh. That part of India is often hit by extreme cyclones. In 1999, a cyclone hit an area in Northeast India and killed over 10,000 people. And in 2019, 20 years later, another cyclone hit almost the same area with almost the same strength, but only 56 people were killed, fortunately. And the reasons for the fatalities included better storm prediction, much better meteorological services, an Indian government exercise that sent out text messages, and since most of the people in the area in 2019, or many of them had ability to use mobile phones, they were able to send out millions of text messages to affected residents and evacuate large numbers of people to shelters and thereby significantly reduce the loss of life. Now, while this is not directly an insurance solution, it does indicate that the power of technology to help address some of the challenges that we face with vulnerable populations. Speaking of challenges, I've listed several on this slide in terms of the sort of challenges of providing insurance generally these vulnerable populations, but also specifically with regard to climate risk. And often people have low and volatile disposable income, which means paying insurance premiums can involve a choice between buying medicine, food, or insurance, and that's often a very easy decision to make, which is often not in the direction of purchasing insurance. Often too, we have low levels of education and literacy. There's a lack of trust in some financial institutions, which means there can be a limited appetite to buy insurance. In many cases, people do not necessarily trust financial institutions to honor obligations. Particularly when they involve something as intangible as an insurance policy for people used to operating in cash or even in barter situations. Many vulnerable populations have a high exposure to natural hazards, but have weak community health and social services. And thus they have limited access to traditional insurance and financial services. From the perspective of private markets, often the sums insured are very small and the premiums are very low, which can make it difficult to attract the attention of large financial institutions accustomed to insuring very high-priced assets in developed countries. And also the low premium levels make it really important to have low administrative expenses so that premiums are affordable. It's certainly, even if the premium for the risk is very low, it can, if the administrative expenses are high, it defeats the purpose of the cover. So, okay, so there are solutions to these problems, and we certainly won't cover them all here, but I'll just highlight a few. That certainly insurance products can be part of the mix that helps to stabilize incomes and protect vulnerable people from falling in debt after disasters. One of the biggest drivers of poverty in many countries is the degree to which populations fall into debt when a harvest fails or when a disaster results in their homes being destroyed. And that can create significant problems because it can take money away from their ability to pay for education or health care. And it can also create an environment where people do not want to take moderate risks. So like, for example, trying new crops or investing in fertilizers or other agricultural equipment. So by using insurance products or microinsurance to help stabilize incomes and protect vulnerable people, you can increase their level of financial security and reduce the amount of debt people fall into after disasters. I think another positive thing, as I alluded to with the India example, is the technology that is enabling insurance. Some of the challenges that vulnerable populations face are as simple as simply identifying people. Many countries are now embarking in processes to give citizens identification numbers and ways to identify themselves. It's often difficult to participate in the financial system with insurance or banking if you can't identify yourself. So technology is enabling that to occur. Technology is also enabling banking services, which is important to do things like pay premiums and receive payments. Delivery methods through mobile phone technology is important. And by being able to deliver things with high technology, you get economies of scale, which can control the administrative costs and therefore make insurance affordable. And as we saw in the example of the massive saving of life in India in the cyclones, that the technology can contribute to loss control and you know, better health and better outcomes. So I think there are significant advantages to providing insurance to vulnerable populations. It can foster economic development. It can motivate people to reduce risky behavior by sending an economic signal to people. It can spread risk and thereby increase financial security. I'm going to close my section by talking a little bit about some key approaches to providing insurance. And the two I'll sort of focus on mostly are microinsurance and risk pooling arrangements. But in our paper, we talk about you know, cooperatives and parametric and index insurance products. There are several examples in our paper of microinsurance, and you know, certainly this is not meant to be an exhaustive list of examples, but I'll just cover a few here to give a flavor for some of the really exciting things that are going on in the innovation that's occurring to help vulnerable populations. Blue Marble Microinsurance is a consortium of insurers, reinsurers, and brokers that have pilot programs in Africa, Latin America, and Asia. And they offer products using customized indices. So, for example, drought and excess rainfall in these countries. The Horn of Africa Transfer for Adaptation, Haritia, is sponsored by Oxfam, Swiss Re, and several other organizations. And it provides weather index coverage for rural areas with an emphasis on Ethiopia. And it uses a rather innovative premium for work model where payments for insurance are made through the provision of labor on community-based disaster reduction activities. I'll also mention R4 Resilience, which is from the Oxfam and the UN World Food Program, which basically improves to give low-income farmers strength and security through improved resource management, such as planting trees, risk transfer, microcredit to help people borrow small sums of money to invest in agricultural techniques, and also helps with savings. And then we also have an example here, the Kenya Livestock Insurance Program, which I found interesting because it helps farmers deal with climate change, not by indemnifying them for necessarily for losses due to climate risk, but also when drought occurs, it provides food and other necessity to keep animals alive, instead of just compensating people for animals who've died, which is a very innovative way to try to help avoid loss. So you can see examples here of both, you know, things that support people against drought and rainfall issues, but also help mitigate loss, which is very important. If we talk about risk pooling, there are many initiatives around the world. I'll just mention a few of them. The African Risk Capacity is a group of sovereign risk solutions across Africa that provides risk transfer to access capital and makes many coverages available for droughts and cyclones that can be customized to national needs. There's the Caribbean Catastrophe Risk Insurance Fund, which I was familiar with when I worked in North America, and it provides parametric risk pooling mechanisms to cover wind and flood for countries in the Caribbean. The Pacific Catastrophe Risk Insurance Company does something similar for Pacific Islands. And interestingly, we mentioned in the paper, though we didn't know it when we wrote it, the Pandemic Emergency Fund, which included a pandemic insurance bond, which paid out for governments subject to pandemic. So I think these are all really interesting initiatives, and they show some of the creativity and the diversity of solutions that are being offered in this space. And unfortunately, we don't really have time to go into detail on all of these, but there's certainly a rich amount of work going on in this space, which I think is should be of great interest to actuaries. I wanted to close with some comments about the current pandemic and its relevance to climate risk. You know, when we think about the current COVID situation, we see many parallels with climate risk. Certainly the problem is multinational. You know, neither viruses nor carbon know what a border is. And we also have a significant problem with what I call, you know, tragedy, where it's called tragedy of the commons, where, you know, basically actions by some to improve their economic lot can affect others. And we see that where carbon pollution from one area affects populations in others, or when perhaps countries that do not adhere to strict virus control measures can spread infections to others. Certainly, the pandemic exposes the importance of global organizations like the World Health Organization, the United Nations, the IPCC, et cetera, and that it's critical that global organizations are strengthened to address issues in both areas. Certainly, the economic costs are enormous from both sources of risk. Investments in protection can make a huge difference, and vulnerable populations are particularly susceptible, not only due to their exposure, but the fact that they have access to more limited services and less disposable income to invest in protection. So I think that, you know, we see many parallels in these two risks, and hopefully we can learn some lessons from the pandemic that will help us deal with the long-term issue of climate risk. With that, I will turn the program back to Sam.
Thanks. Now I unmuted myself. Thanks, Raid. I think I'm going to address the last two items, but please remember that we'll have a little bit of time for questions and answers. So you go to the bottom of your screen to put in questions. We already have two, but hopefully we'll have several more, and we can relate to your concerns that you raised during the course of this webinar.
Oops.
And get back to where we were. Okay. Chris, can you increase the size of that? Great, thanks. Ray has done a really good job at talking about what insurance risk management has. I'm going to be talking just for a couple minutes about other approaches, particularly ones that relate to adaptation. It's great to have insurance available to protect the financial aspects of losses that occur, but it's also important to try to minimize the losses to begin with. Hopefully, insurance provides a price mechanism, price signals to encourage this type of action. Many of these approaches, however, can be taken for all populations, whether you're particularly vulnerable or not. And it addresses both the frequency, severity, and the volatility that Ray referred to. Just give you some examples. One is it's really important is we need to have enhanced information about how how climate change pathways and trajectories move toward losses and understand the sensitivities involved for the particular communities. Things like land use rules, building standards, enhanced healthcare and disaster recovery infrastructure. There's the example of a heat wave in Paris that caused many thousands of deaths in the early 21st century. The same type of heat wave occurred 10 years later, where there were no deaths or a handful of deaths, all because the governments and businesses were more prepared, provided a better healthcare infrastructure, methods of communication, and recovery from a disaster. But inherent in all of these, in many of these, particularly the Indian example that Ray mentioned, was to provide a decent early warning systems. Depending on the risks, some of those systems means a couple minutes that can be the difference between life and death and extreme property damage or not. Investments in practice in terms of agriculture and services, particularly in vulnerable areas. These are the differences between a reasonable standard of living the next year and one that becomes desperate and may require and result in a mass immigration. A coastal barrier example, coastal protection barriers is a good example where public insurance and public ability to act is really important. An individual residents can't protect the whole coastline or even protect their own property if you're exposed. But working together through, whether it be through financial institutions, through governments, really protects the whole. And bottom line, economic growth and provision of safety nets. One thing is we can try to do as a society is to move more people out of the vulnerable population area. Get people out of floodplains that are dangerously exposed to climate change, some of which we know years and in fact, in some cases, decades in advance. And there's no excuse for society not to act. These mechanisms, particularly adaptation, supplements insurance mechanism. They don't necessarily replace them, but can be used to make insurance affordable, and particularly something that mentioned was sustainable. One of the questions we had asked was what the role of actuaries are regarding some of the microinsurance. One of it is to develop and provide sound quantitative assessments and analysis of not only short-term risks and long-term risks, and I'll get to that in a minute. There's also various forms of non-insurance financing that's been growing up. There's green bonds, and sometimes green bonds is a huge area, and you got to be able to get into the details of what is categorized as green bonds. Sometimes a lot of non-green areas slip in to a bond area, a bond in terms of providing finance to. So if you're investing, or if a financial institution like an insurance company is investing in green bonds, you need to be able to do your due diligence to make sure that the objective and purpose of the funds provided are going for green sustainability purposes. Various capital markets not only include climate change related catastrophes, but other natural catastrophes like earthquake protection. Also, it's a post-loss financing. Sometimes it's forgotten about the fact that once you have a disaster, particularly property resource directed, you have to be able to finance recovery. Those are provided by multinational institutions, such as the second category that Ray mentioned, or philanthropic entities. But these are can be governmental guarantees, backstop programs, or, at least in my opinion, hybrid programs. Public and private cooperative ventures are probably answers for the future. Mitigation activities, we mentioned briefly, can reduce the extent of climate change. It doesn't specifically focus in on the vulnerable, but it's important to them since they may end up bearing most of the consequential burdens. So therefore, all of this financing that we've been talking about are primarily for the benefit of those who are most exposed and are vulnerable to these risks. And last, the role of actuaries. I think that we have as a profession, as in individuals, have significant roles to play in providing price signaling, risk management solutions that society can utilize, and attending several environmental meetings. Although there weren't many actuaries around, actuaries' presence in terms of providing advice to insurance mechanisms, insurance design, I think are crucial. With those participants, particularly those who are vulnerable involved, and based on the types of insureds, pricing, benefit, design, and effectiveness have all got to be focused in on. Designing a great product in mind, and having the potential market not being able to afford them doesn't do much good. I remember my first product development course or product in insurance was beautifully designed. I mean, it was perfect, technically, tax-wise, provided benefits to cover comprehensive benefits. But unfortunately, the price was really too high for the insureds. So therefore, if you don't recognize affordability concerns to some of these populations, you haven't done your whole job. So therefore, that's where benefit design comes in handy. In terms of trying to design group mechanisms, risk pooling facilities like Ray mentioned are very, very crucial in terms of meeting particularly low frequency and high severity intentions. Bottom line, actual research and information that's relevant to our development of price signaling from insurance and risk management solutions are important. The IAA working groups and actuarial associations have become increasingly involved in the last couple of years, and I hope that both on a international and national level, it becomes we become more and more active. And I focus in on the national, local actuarial associations playing a role in this area. And I focused on earlier about member associations involved in actual climate indices. There's a frequency, there's a focus on frequency of extreme conditions by the actual climate indices, and I think that that's a concern of the vulnerable, and which in turn should be a concern of actuaries. With that ends our presentations, and now we get to Q&As. Micheline?
Yes, thank you very much, both Ray and Sam. We do have a few questions and some time left, so